Ladies and gentlemen, it now gives me the great pleasure to introduce the first session of the day, entitled Green Finance, the Role of the Financial Sector in the Green Economic Transformation. And with that title revealed, please join me in welcoming the moderator of the session, Mr. Antony Currie, Associate Editor for Breakingviews, along with the speakers. And they are Mr. James Grabert, Director for Sustainable Development Mechanisms at the United Nations Framework Convention for Climate Change, Mr. Robert Todd, the Global Head of Renewables and Cleantech for HSBC, Mr. Frank Beckers, Head of Project Finance and Advisory for First Abu Dhabi Bank, and finally, Professor Valerio de Luca, Executive Chairman of the International Academy for Economic and Social Development. These are the names for your first session, ladies and gentlemen. Please join me in welcoming them.
Well, thanks very much for the introduction, and Your Excellencies, thanks for inviting me to come here, and our panelists as well. Welcome to the second day, and keynote speaker, thanks for a great way to kick off the day. Now, let me just explain who I am and why I'm here. I'm actually a financial journalist. I cover banks, I cover car companies, based out of New York. Now, Breakingviews is the financial commentary arm of Reuters. So what we do is we take opinion. We can be pretty brash about deals that are being done and what banks and investors are doing. And most of our readers are bankers and hedge funds, and to some extent corporates. So what am I doing at a green finance conference since I cover Wall Street and car companies? Well, both of those are getting involved more and more, as you all know. But what struck us, when it first struck us that this was a big topic for us to cover, was about 4 years ago. It was early July. We'd seen a report about the economic benefits and problems of water. So I wrote a piece about it. We put it out right before the July the 4th holiday in New York, in a month full of corporate earnings, which all of our readers love to lap up. And at the end of the month, we realized it was one of the top 10 read articles of the month, out of about 500 or 600 articles. And that set off a light bulb for us. Here is a market that clearly our readers are very interested in taking part in and reading about. And I think what we've heard at the conference so far confirms that. And there is a great deal of money waiting on the sidelines. As Zoe Knight from HSBC said yesterday, 2/3 of investors surveyed by her bank said, yeah, we'd love to put more money into this. And there's, as she said, $100 trillion or more needed just for infrastructure over the next 10 years or so. So the opportunities are huge. So it's no surprise to me, really, that when I look at the banks I cover, I see a lot of them, especially those with big wealth management arms, deciding to set up research arms, deciding to get into more sustainable development ideas, whether it's through innovation, or more importantly, I think for them, they're setting up institutes to do research, and also more funding as well. But those, I think, to some extent, are banks worried about losing the money from the people in, people in their 60s, 70s who are going to leave their money to their millennial children. I think a lot of these banks are worried about losing that money, that millennials want their money to be invested in a socially responsible way. But I think a lot of other banks are seeing that there's a big opportunity here as well, as our keynote speaker was saying. And yet, despite all this, there is this really big impression, despite what the keynote speaker said, there's a big impression that banks and financial services in general, institutional finance, isn't doing enough in the world of green investing and the green economy. So that's where we're going to start off today. I'm going to pitch this one to Frank. We did kind of discuss this earlier, but Frank, when we first discussed this a couple of weeks ago, you were saying, hang on, that's not quite right. So why don't I put it to you, why is it you think that there's this sense that banks aren't doing enough? Is it a holdover from the crisis where banks are still regarded as somewhat evil? Is it because everyone's looking at startups and thinking that banks aren't doing enough? What's your impression from where you sit here?
Well, I think predominantly we as the financial service industry are to some extent, of course, following our clients and following the needs of our clients. And that's why there may be sometimes a little gap in us serving the needs. But we've been playing a very important role in green financing or environmental financing for a long time. If you just look at how and where some of these standards evolved from decades ago, defined by World Bank and others. So I think there's a consciousness in the financial industry for a long time with respect to environmental safety, etc. I mean, here in the region, of course, the region has now taken a leading role in developing renewable energy, for example, with large-scale projects, with targets much higher than we have seen them in other countries. And we have been, as banks, local banks as much as international banks, but also particularly local banks, supporting those initiatives by financing all these large-scale projects. That's how the region here has actually started. But as I said, we are a bit following the demand, and we may have not yet been so good on serving demand for much smaller investments, but those are just starting. So as the demand will evolve there, we will follow and we will come up with products. On the big projects, you mentioned, do we have enough capital there? I think the banks are very much active in this, and we will continue financing this. We like renewable energy, but if you look at the targets being set for the region, they're so high, which is very good, but they're so high, they're requesting so much capital that I think in the long term we will need additional liquidity sources to come to the table, because we won't be able to do it as banks alone. And the biggest, obviously, liquidity source that's there is the capital markets, which we will need in the future. If we look at the 2050 targets for Dubai, for example, that's just too much for the banking industry to do. Yeah. So we need more then.
Now, Robert, let's turn to you. I mean, your role, I mean, your title basically screams to clients of all sizes, come to me. And you must be getting pitches from people that just don't fit into your remit, but they may be very small. I mean, I'm assuming that much like Frank, you're dealing with big projects. And yet, you put Cleantech in the title, and that, to me, seems you're going to be getting, startups galore coming to you saying, hey, here we are, come give us some money.
No, that's right. We have a wide range of customers, from the very small to the very large, on a worldwide basis. And for us, it's important to see how we can be relevant to each of those in their different situations. It may be funding large-scale projects on the one hand, but it could be more of a growth emphasis for some of our smaller clients, whether that's a project development type business or whether that's a technology startup type business. Each one has obviously a different profile and different prospects, and we have to look to try and support them where we can.
And what about capital rules that have come in since the crisis? Has that constrained your ability to do certain business? Start with you, Robert.
I wouldn't say so. I think an institution like HSBC is very relationship focused. So where we have relationships, and in an area like this where the world is creating a new category, essentially, we're forming new relationships all of the time. And for us, that means a long-term partnership, effectively, where we can help people in many different respects. So I wouldn't say those particularly have created any barriers for us. There are multiple different sort of tools and products and services that we can be helpful in.
What about you, Frank? What's your view on capital rules?
Well, I'm not so sure it's capital rules. To some extent it is, but there's also other effects. I mean, if we look effectively, the way these projects are currently financed here in the region is, I don't want to become too technical, but is on a soft mini-perm basis, which basically means it's not truly long-term financing that's being provided, but there is a very strong incentive imposed on the borrower, on the project, to refinance about 5 to 7 years down the road. And that is to some extent driven by capital rules, particularly for international banks, but increasingly also for us. But that's also simply driven by very large liquidity costs that we have, and refinancing costs, and that make very long-term lending simply very expensive. And our clients are always in a very competitive scenario where they have to bid very low electricity prices, and the best outcome for both sides is to have long legal tenors, but effectively a shorter term financing where we get into refinancing. But again, if we want to overcome this, if we want to go into truly long-term financing, the instrument that's really suited to do this is capital markets instruments. So it would be very interesting to see how much refinancings we'll see by way of bonds, whether they're called green or not, sometime down the road when these mini-perms start kicking in and become very expensive.
Yeah. And James, let's bring in you here. How do you see that developing? Obviously, the keynote speaker mentioned green bonds, which is a topic we can get onto as well. There's a lot of concern about standards, about the right metrics, about whether there's the best way to, what's the best way to get more investors involved. And what have you seen so far, especially as the green bond market itself has grown, as our keynote speaker was saying?
Well, as we heard, 81 billion in green bonds last year. But let's remind ourselves there's 10 billion or more dollars a day bonds being issued, if I'm not mistaken. So we're talking about 1%. So it definitely needs to be bigger if we're talking about the scale of the problem. To deal with what the Paris Agreement has asked us to do, for countries to deliver on what they're to do, and for society to be involved in the private sector as well, we need basically massive scale up in terms of the financing. And I know that's why we're having these discussions, but I just want to put that context there. But in terms of what the solutions are, you know, there are three things I would say. First of all, there's definitely a role in the sustainable finance space at the national level. They need clear roadmaps. If government's goals are not being set in a way that are leading towards clean investment, and it may be, you know, regulations on capital flows or other things, but there's definitely that needs to change. So it's not just the banks, the investors, it's also the national governments have to align through the process that's, you know, established and, you know, through the Paris Agreement and their national determined contributions. But to get to the nitty-gritty, it's about, you know, not only having putting projects out there, but putting in place the policy frameworks, the policy decisions, to not be involved in you know, things where your infrastructure are in hindering capital flow, have fiscal policy aligned towards green investment, many of those things. The second thing is it's about the targeted, you know, it has to be an awareness, I would say, from the organizations about the importance of really disclosing their risk.
Right.
Organizations, I mean, the whole effort that's moving forward globally about the risk disclosure has to be done. It has to be implemented. It has to be more than just voluntary. Without the clarity of what you're exposed to, it's not just the physical, you know, and it is, so we see climate change as a long-term issue. No, it's also a very short-term issue. It's not just the long-term climate impacts, it's the immediate impacts on your corporate profiles due to the changing technologies, changing climate policy, changing market behavior. There's a huge risk. And that would help better understand the need for investment, the types of investment, et cetera. And then finally, what you were asking about is the whole measurement element. The impact of investments have to be clearly measured. We need to all have better data, I think, on again, how the investments can drive our capital asset changes. Right now, we have estimates, you know, from, you know, say 5 trillion to 43 trillion could be the impact on existing assets by 2050 because of the risk. Is that the best we can say? You know, that comes from the economists. We need more information.
Yep.
We need to be able to measure things more accurately. I mean, you will get response from the investors, I think, with everyone involved, the national, the private sector, the organizations, understanding the real risk they're involved with and understanding the need for that investment. And to communicate it.
Valerio, let's bring you in. You were talking earlier on to me about metrics as well. I mean, what's your take on what else can be done to involve the financial community, as it were, in investing more in this area?
Tony, before let me thank His Excellency Said Mohammed Al Tayer, Walid Salman, the organization and the sponsor to have kindly invited me to this important event that call each of us to work together and to share experience and visions. And we live, I think, with two sentiments. We live in turmoil and transition, fear and hope. And one of the problems is that the market and the financial institution are sometimes confused of what is called green economy. I think that is a problem of definition, awareness, and culture. There is a way of saying in Italy, but also I think in the UK, they say that where there is a will, there is a way. There are a general consensus of the urgent necessity to greening our societies and economies to the transition or to change the economy, but not only changing the economy, but to better people's life. But we are still in thinking solution, and this general consensus will crash on data and numbers. Only 1% of the total investment and issuance of green bond are on the market. Investors still suffer of risk, reputational risk, low liquidity, and environmental risk. And so this is a problem of interpretation. So what we can do? First of all, I think that we have to scale up the pathway. We need the cooperation of private and public sector to align the financial market development with the policy action through a flexible implementation of standards, principle, and the criteria of metrics. But also we need a friendly regulation and to translate this vision standard in international harmonization and institutional reform, fiscal policy. So the challenge is very high to foster the prosperity. And one of, maybe we can talk later about this, one of the tools could be the FinTech associated to the green economy.
Let's dig into a couple of these things. I mean, on green bonds, for example, and Robert, let me put this to you. I think 80 to 100 billion of issuance probably this year. We've got companies out there like Apple issuing green bonds, and I'm not going to say that they're right or wrong to do it, but Apple doesn't really need to issue a green bond. So is the green bond market really out there properly yet to be used for proper green issues for those who need to tap that market? I mean, do you get better financing from it? Is it really opening up the market to more investors? Or is it, I mean, I don't want to be rude and call it green mail, but is it a bit of a marketing ploy for some of the big cash-rich companies to be using it, for example?
So I think with the green bond market, there was a certain element, I think, at the outset of corporate sustainability type philosophy, but I think that's fundamentally changed. And I think this year particularly, we've seen an acceleration. I think it was mentioned in the keynote speech around a number of features, the acceleration in the growth of green bond issuance, the accelerated decline in LCOE, the accelerated decline in capital cost, the sheer number of new faces emerging in the industry. And I think as a consequence, we've seen a real willingness for issuers to bring green bonds to the market. And we've seen an appetite from fixed income investors to subscribe to those bonds. And those issues tend to be oversubscribed quite heavily. Ourselves, our platform has been one of the big drivers in green bond issuance across sovereigns, across all different segments, including renewable energy. And I think part of that also is the fact that there is a topic now which is elevated and mainstream, so there's greater familiarity, but also to some degree more maturity in some of the projects, particularly from, say, a renewable energy perspective, where over time now, rather than small, highly subsidized projects, we're looking at gigawatts of capacity on more economic terms. And that then provides the foundation for perhaps a more diverse range of financing sources, which can include green bonds. So that's one strand of potential financing, but that has opened up dramatically, and I can only see that increasing over time.
And Frank, you mentioned a couple of times the need for capital markets to take on more. Does the growth of the green bond market give you hope that that's already happening, or do you see these as mostly investors who would have bought paper by some of these companies anyway?
Well, I would hope it will support capital markets to come to the table, but ultimately it's just a function of for most people it's just a function of risk and return. So I think that's how the capital markets are driven. For me, always the question is, when we look at green bonds, what is the motivation to do green bonds? Well, and I see two. It's on the one hand people that do it for reputational reasons. I don't think, for example, here in the region, the renewable projects will have to do it for reputational reasons because they're green by definition, but it's a renewable project, so they don't suffer from this. And the other one is people who otherwise don't have access to financing and see a route to get access to bond financing through green. And it's also a problem which the projects will not have, but it may be able to attract more investors by having that green logo, because it's not just purely commercial investors that otherwise would do a project bond, but also some others that actually want to invest in green. Right. So I definitely hope it's going to help, and I would think that we'll see some this region will most likely be the one that will see green type of project bonds earlier or to a larger extent, simply because this region started off with a very large-scale projects, which are suited for capital markets instruments, while other regions, like in Europe, they started off with the smaller investments, and you first have to get to sizes that actually make sense. If you look at projects, on the corporate side, that's usually always there, the size, but at projects, you first have to get to volumes that justify a capital market instrument. Here we don't have the problem. All these projects are several hundreds of millions of dollars large, so they're really, really very well suited to attract a bond structure.
Robert, let's put that to you first. Do you see, is disclosure improving at a certain level at least because of green bonds?
Absolutely, yes. I think there's greater disclosure and there is increasing scrutiny generally around intensity at all levels. So throughout the life, I think there'll be more emphasis on corporates and groups to actually disclose their consumption, the patterns, the origin, whether that's energy, whether that's raw materials and so forth. There is simply more scrutiny out there and the market is demanding more disclosure. And I suppose green bonds is a good example of that.
And James, I mean, you brought that topic up. Have you seen that in green bonds as well? I mean, you did mention it briefly, but what other things are needed, you think, for green bonds to attract more investors and corporates?
Well, I mean, we have the outputs of the task force on the climate-related disclosure that ideally should not be voluntary, but move to be a standard that needs to be followed. So national governments need to take this serious and look at this and see how in their own environments can make this happen and implement it, first of all. Second of all, I think all the corporations need to really think about not just the disclosure is part of it, but to get to there, you also have to understand what is the real pathway of your manageable assets out through 2050. What is the real the climate risk there, and to understand that, and to hopefully do that and look at that in a consistent way. There are efforts underway internationally, and there's initiatives on the transition pathways for this, for example, to help corporations consistently look at how they would look at this pathway of their assets through 2050. There's work we're doing with the ISO to develop standards that can be consistently used to measure the real impact of the investment side. So all of these efforts, I think, could also do more than, could do addition to what the actual products are also driving the change, of course. But the international community and the national governments have to be involved in really creating the standards and enforcing them and insisting that we all globally start using a common set of metrics and tools.
Yeah. I mean, when I look at the investor side, I do see a lot of pressure coming from investors for more information. And one company that I deal with a fair bit is CDP, which does a lot of work on getting companies to disclose more information. How willing are they to go down that path of giving more disclosure? Have they got down into disclosing more about their supply chains that may help investors appreciate the risk more?
I think we're very early in the journey, to be honest. I think there are corporates taking a lead. There are all sorts of other related initiatives like RE100 and so forth, where corporates are looking at themselves, looking at their profile, and making public announcements as a result. So they're willing to put themselves in the public eye and make commitments. Others are maybe more in sort of review mode to try to understand their own position. It's not always easy to perhaps audit yourself in many ways. And there are also groups who are looking more deeply and examining the supply chain and thinking about all those relationships. And if you imagine when you take that into consideration, it's a proliferation of relationships at that point.
Yeah.
So it becomes a much more complex exercise. So I think there's a whole spectrum of different groups. You've mentioned some of the high-profile type names, but the theme is definitely permeating more deeply now.
Yeah. And Frank, let's get on to the theme of what governments can do. Germany started off with very small investments for rooftop solar or whatever. And you were saying beforehand that in the region here, for example, which I think you mentioned, big projects of where it started. Can what the KfW Bank in Germany and what the UK government did in Britain to try and push solar, for example, at an individual level, can that be used here as well? Do you think are there lessons to be learned from those markets to be used in this region to increase smaller lending, which then might expand and you guys could get involved, well, your bank at least, if not your department, could get involved in more readily?
Well, definitely you can basically also use some of the instruments that have been used in Europe. You could use them here. It's all a question of what your targets are, what the political will is. I mean, in Germany, of course, they wanted to promote rooftop solar, and also wanted to give people, individuals, household owners, cheap access to financing. So basically they created government subsidized loans through KfW, which have a certain interest subsidy, and obviously your investment needs to qualify for it. So there's pretty severe criteria which you have to fulfill. When you fulfill them and your investment qualifies, it can be a solar on the roof, it can be a house with that you build with a certain efficiency, energy efficiency, then you will have access to this financing. And that makes it's not that these people would otherwise not have access to financing, but they get access to cheaper financing this way, right? So this is a way of promoting it through a cheaper access to financing. And I think we see some initiatives starting here to give people access to some funds, green energy funds, government funds, for rooftop and other green investments. So definitely, yes, it's something that the region can use. I think it's much more suited, as you said, it's suited for the household owner, for smaller type of investments that otherwise struggle to get access to finance.
Valerio, let's bring you back in here. You'd mentioned FinTech earlier on. How do you see that working as filling these gaps that may be there for the smaller companies or even for individuals?
First of all, FinTech is not only a one sole only technology. It's a complex, it's a system of systems of technologies. It's combine Internet of Things, blockchain, artificial intelligence, peer-to-peer platform. So it's something that is really complex. Also, we have not to forget that the technology is an instrument that is neutral respecting to the hands. Business and political leaders has to set up these hands. And if one of the goals of the leaders is the financial inclusions, I think that FinTech could help the challenge, the change that come up from the bottom. I mean that some companies, unbanked, startup, small and medium enterprises, through the peer-to-peer platform and this kind of decentralized and disintermediated platform can access easily to the capital market. But also we have to think that there are not only opportunities, but also some risk with the FinTech. Just think about the technological unemployment, the role of automated robots in the financial market. So there are also a lot of risk. We have to maximize the opportunities and to minimize, of course, the risk. But I think that the FinTech coming from the bottom up could really make change, and in particular to connect the financial system with the real economy. The financial crisis that we experienced had this problem to disconnect the financial system to the people, to the real economy. It came up with an autonomous system that created a lot of inequalities. And I think that FinTech could help to promote and foster prosperity from the bottom. And Italy, for example, is doing well on this issue. And as well as Dubai, the government has involved the green finance in its strategic and governmental strategies. The government agreed to a lot of standards and principles agreed internationally. The private sector, in particular the Italian exchange market, has approved and introduced a new segment just for green finance with a list of requirements and disclosures and a lot of also transparency requirement. So I think that starting from the top of the governments and with and small and medium enterprises. We have 4 million of in small and medium enterprises in Italy that have to access to the financial market and green economy. So I think that FinTech could be a good opportunity.
Robert, when it comes to FinTech, especially I suppose, I think mostly about lenders, and I look in the US and I see banks striking up a lot of different relationships with these disintermediators, whether it's to buy their loans, whether it's to repackage them into bonds, or even to refer clients to them if they just don't fit into the bank's lending routine. Is that something you could see develop here in green finance?
Yes, I would say so. I think it sort of comes back to the introduction of new technologies and the innovation element, which is having more impact today on many different business models, whether that's our role as a financial institution, whether that's an energy business, and what are the sort of conventional structures that perhaps they're adopting today. But what we're seeing is the introduction of many new structures, peer-to-peer type arrangements in a distributed setting. They are now becoming more common. We are seeing those in many different settings, and I think as we move into this more decentralized type energy system, those types of elements will help when we're thinking about real-time management of demand and supply, rather than the typical centralized model. So I think there will be more emphasis, and as people become more comfortable that there's integrity in those types of models, that the technology works, that there's a track record, that you have the assurance that your counterparty is the counterparty that you think they are, etc., then there'll be a broader adoption of those types of systems.
Thanks, Robert, and thank you, gentlemen. Now please join me in thanking James, Robert, Frank, and Valerio for taking part this morning. Thank you.